Well, as we expected, the beginning of December is bringing the volatility, and markets across the world fell off a cliff in the last 24 hours, led by technology. So, what do we know about the best stretch since 2020, and what can history tell us about the sentiment and dark pool activity going on right now? More importantly, will we continue to see Wall Street dashing for trash as rotation occurs that we've expected now for over a few weeks? And what's going on with these two? Bitcoin makes a new high and gold does so as well and then gets crushed back down. The results might surprise you what happens next. Let's talk about US 500, everything to do with technology stocks falling off, and of course, what's going on with this massive short off in gold. That along with rotation coming up in today's shows as we discuss stocks, commodities, and cryptos together. Well, welcome back everyone to the Daily Show where we talk about the macro lead indicators and the hottest charts together. My name's Tom. We've been doing this show over 3 years. And if you like anything to do with markets, make sure to subscribe and smash that alert button. We'll do it every single day. Let's talk about big tech. We've got a huge rotation occurring and we've already discussed the idea that the Mag 7 was weakening. More on that later in today's show and what our expectations are. But let's discuss sentiment. I did a quick survey on the weekend just before the stock market opened, and it turns out that most of you were split through the middle. 52% bears, 48% bulls, and I've got to say, this was the kind of structure that you were looking at in the markets, a sideways one. So, of course, it opened up opportunities, and the only weak index was realistically big tech. And we'll go through that later on. We put it in the weekend show, and we'll discuss what our expectations are next. So speaking about history, when we've had a strong year such as we've had right now, do we expect this type of weakness in December? Well, frankly, yes, we do. And of course, when we saw those big tech stocks starting to roll over, it signaled to us that rotation was occurring and there was possible weakness in the big tech stocks moving into the first few days of trade. Well, so far, so good for that. History would tell you that somewhere around that 10th to 15th of December, we often bottom off. And then we start to see what we call the Santa rally or the pickup into the end of the year. Will it be the same again? Well, I posted in our newsletter, which is completely free, so go and join that. Links in the description down below. Some interesting charts talking about what our expectations are for 2024 as well. If you're interested in finding out more about that, you can do so by just clicking those links. Name, email, it's that easy. Let's also discuss what tends to happen after posting an incredible month. Here are the S&P 500 biggest monthly gains and forward total returns from 1950 all the way to today. That is talking about over 70 years of history, and it might surprise you to see that actually the average months are weird when it comes to 1 month forward after having such a strong S&P 500. We do tend to go into what we call some form of consolidation. Now, there have been some that just keep selling and selling and selling and selling. Notably, we have here March 2000, and we also have the 1980s as well to be discussed about. Now, notice that also, look how many Novembers there are. There's actually quite a few November months. Maybe it's statistics, who knows? The gains over the next month usually are a little bit more lackluster, which could show us that there is a okay pullback coming, followed by a little bit of a rally. If we believe Bank of America, then we would say that we're still in a very strong buy zone. You can see here Bank of America's bull-bear indicator is still quite low on more the buy-end side, certainly not on the extreme sell side. And here's the history of how that's looked over time. Of course, hedge fund positioning is in focus. 82 percentile. Sentiment, very bullish. Yeah, when they get that bullish, there often is a little bit of a pullback. That's an interesting stat, and of course, we'll be following along with that indicator, so make sure to follow. Here are some other sentiment indicators. Of course, bears going into 19.6 territory. Yeah, under 20 is pretty bad for the bears, and 31.7% neutral and 48.8% on the bull side. Generally, we see this kind of run into the 50s sometimes before we get a pullback. But look, this is a huge read. 4 weeks of extreme bullishness at the highs. It's time for some consolidation, or at least you would hope some pullback. And there are a couple of case scenarios that we'll look at later on the charts I think might surprise you. Let's talk gold now. Now, that was not what you want to see if you're a gold bull or if you're looking for that gold 2,500, 3,000. It was a shocking open. I know it might look good when you look at it on the first kind of hour or something, but really that was an absolute squeeze. What that did was shorts got absolutely blown out of the water. They had to cover. And then, of course, the market rallied. Well, it didn't rally. It got dumped all the way back down. Now, unfortunately, this means that gold moved in a big way in terms of off its 52-week high. And we've seen this play out so many times before. Here are all the other previous times. And you can see it brings us into consolidation periods often for gold. Not good for the gold bugs. Could be the end for now. But of course, I still have positive long-term thought processes on it. And you can see that it still does lead usually 12 months later into positive territory. But I don't like what it's doing for the next couple of months. We'll have to watch this one very closely. The stats are bad, though, for gold now over the next month or two. I'd probably expect consolidation to even downside. We'll look at those charts as they clean up over the next few days. Let's talk about what Wall Street's really been doing recently. Now, they're probably chasing this chart a little bit. So this is bottom-up EPS, and this shows you that generally speaking, most economists believe that the market's going to be growing quite heavily in 2024. Now, they usually get it wrong, and I think I posted over on our X account, links in the description down below, that they get it wrong by a factor of around 7% from their expectation. You can see that's happened in quite a few of the most recent years, but they could be chasing this EPS, and that's allowing them to push the market back up. If you take it on 2025, I believe it's about 16.8 times forward PE. So if you go another year out, the market's trading at the moment on future 16.8 forward PE or somewhere around there. And this is kind of how you have to consider markets. You have to think about what are they trading on the futures, because of course that's where it's most important. If you have a look at S&P 500 earnings growth expectations for Q4 2023, you can see energy, materials, and healthcare got a massive knockdown. And this is one of those things. S&P 500 earnings and revenues are expected to grow by 3% and 3.1% overall year on year in Q4 respectively. That's at least the expectation, coming mostly from comm services, interestingly, utilities, consumer discretionary, and infotech. So some following and chasing of accounts there, I'm sure. That would also explain why healthcare has been so knocked around. It got massively downgraded. So what happens in 2024? What happens over the next month? We've already talked about the general December action. And of course, we'll be looking for that on the charts later on. But do remember, tightening around the world is decreasing. This is another reason why markets have been allowed to rally right now. They've probably pushed some of these sentiments a little bit too far, and it's starting to cause problems. Here's the difference between the Mag 7 versus the S&P 500 when you take the Mag 7 out of it. They look very different. There's catch-up to be played here, so of course we'll be looking for breadth to improve, which is already starting. So should we be concerned? Well, insiders continue to buy technology stocks for now, which usually is a positive sign at these current prices. So pullbacks probably going to be met by bull demand. And that's because, they usually get it right. Look at the history, look at what they do, and they tend to get it right over the medium to long term. It doesn't mean that it's instantaneously going to rally back up or anything, but it is something that occurs. Another thing to note is that generally markets, if we are going into a recession, and that would mean that we're starting to get a bit freaked out. And of course, we know when that's going to happen. Generally, we're going to see something like a US 2-year versus 10Y fall off a cliff, and that just hasn't happened yet. Then we go into a period that tends to be quite bad for stocks. This could be 2024. On average, we lose for about 195 days to the bottom, and on average, we lose 23.5%. Remember, JP Morgan's kind of expecting these situations where we go into what we call corrective territory, maybe a negative 10, and we've already experienced that over 2023 so far. So it'll be nothing new to most people. If we get a negative 20, then of course that will be a bit more serious. Here's what all of them have looked like since 1950, and you can see that in general, you get a lot of bounces off that 180. If it keeps going down from there though, maybe you need to be a little bit terrified. So I think 2025 or 24 is going to be an interesting year. So what's happening right now? Well, we've got a big rotation into small caps and mid caps, and we've discussed this for 2 weeks. So when we look at RSP, you'll see that actually IWM, RSP, a lot of the other sectors of the market are actually still up and bulling, even though we just saw a sell-off in the tech and the S&P 500. And this is kind of normal. Often we see a bit of a drop-off here, followed by a mid-rally through December. So it doesn't mean that the Russell can't fall here. Just remember that. It traditionally does. And the rest of the market kind of sells into around the middle of the month. But then we get this rally that goes into January and sometimes even February. Will it happen? It didn't happen in 2022, but it has been a relatively good run. Let's take a look at the stats now of dark pool transactions and why they need to be watched. So we already know that December has those rotational flows. Has it stacked up with what we've seen with dark pools? Well, I believe it has, because we've seen a lot of VIX trades near the lows. That basically means someone was betting on some vol coming back into the market. It did so over the last 24 hours. We've also seen huge amounts of transactions going on the Qs, which will need to be watched, and we'll look at the charts very soon for that. If these keep falling off, then we could go back down into these structural zones on the left-hand side, and that could give us the pullback that many people have been looking for before maybe rallying up some more. And we just had a large print on the S&P 500 as well, which could push back down to, who knows, maybe a 420 or even a 400 if things start to get nasty for the beginning of December. We'll go through those charts soon. Treasury's also showing the same type of thing. We filled the gap on the left-hand side, then we saw a bit of a sell, and this came through as of last week. But it doesn't just stop there. We've also seen Palantir, we've seen Amazon, we've seen Meta, we've seen the Mag 7 have outflows across the board. Every day we've pretty much been reporting on these highs, getting some big transactions on it. And someone's been dumping a little bit. Maybe we're going to see continuous fall off. Then we'll see hopefully a rally when we get these pullbacks. Let's talk options now. It was a pretty big day, 39.5, right on average in terms of what options do. 58% calls showing us that starting to stack in the favor of put buying. And we've seen that a little bit. We've seen PCC, which we'll look at, put call ratio, really dropping off. And that's telling us that, yeah, unfortunately, I think a lot of retail traders could be trapped up here in the highs, which is something to be importantly noted. And retail is 27% of the single legs. In terms of unusual options activity, there wasn't really anything that was too wild. We have a pretty good match between the S&P 500 in terms of puts and calls recently. Same thing with the Qs in terms of getting that a little bit more in line. One thing of note was there were huge amounts of puts stacked on the Russell. Remember when we were down those lows for like 3 weeks, the Russell just got slammed with puts. I mean, there were puts everywhere. We've finally started to see calls really coming back into that market over the last week and a half, which has given it that outperformance. But yeah, there was a massive amount of put imbalance there when it came to that market. Let's also talk big random trades. So of course, we have a few that came through. One of my notables is Enphase. I've been talking a little bit about solar and clean energy. We've seen some unusual activity coming through, at least a little bit higher. We also got another one that's interesting here. We have utilities putting in a fairly large trade, 1.86 times average. And then the rest of them were just all pretty much the normal. Now, Uber is here purely because it got included into the S&P 500. We got a lot of questions about this in our Monday Open show. And I would say that the gains have been had. So if you were looking at it and saying, well, I should buy Uber right now, I would say, well, look at the charts, because the charts show you that you're at resistance. And at least from that standpoint, you're at kind of where it's the buy the rumor, sell the fact. And that's often how it can work when you're looking at inclusions into the S&P 500 or any major index. Let's look at the last 24 hours. It wasn't exactly, freaky when it comes to the markets. We saw regional banks up. Okay, that's rotation. We saw clean energy up. All right, interesting. We saw biotech up, one of my favorites recently we've been talking about. And then, of course, the staples and the mid kind of defensives in the middle. And then down the low, we had things like semiconductors, gold, which have been doing really well. And obviously, semis really led a lot of the fall. Now, this is important because it shows us that it wasn't an across-the-board sell-off on risk. It was a rotational shift. And it's what we've been discussing on the channel for a while. Look at the last 5 days. Semis haven't been good for a while. Neither have communications, neither have technology stocks. They're the three that are down the bottom. Now, you could argue, well, that's the beginning of the end for all of it. I think it's just rotation at this stage, and it's pretty much expected at this time of year. So let's get into the charts and talk about it. First up, effective yield rate. It did spike up. Something to be watching. Obviously, if this gets out of control, we'll certainly be quite concerned about what's going on in the markets. RSP, equal weighted market, you can see it actually made a new high. So it's not like the rest of the market. The equal weighted market was suffering over the last 24 hours. It really wasn't. When we go over and have a look at our bond indicator, the bond indicator still looks pretty good. So I would say that it's still theoretically risk on, even though there's a pullback. And it is perfectly normal to see a pullback like this. It is needed. It is the right thing to happen. And of course, everyone's been screaming for it for a little while now because we've gone up 5 weeks in a row. Let's have a look at treasuries. They hit our yellow line. Well, that's where we expected the gap fill. So I'd like to see treasuries consolidate or even move down here. And one thing I was talking about in the live stream and even in our Market Masters Club was the US 10Y. You know, I look at the US 10Y here and I'm kind of like, well, it's at a point where I could see the 10Y actually bounce. Remember, it's been selling off now pretty consistently for quite a few weeks. It would make sense to see a little bit of a relief rally in the US 10Y. Could it be that the non-farms or the jobs numbers this week freak the 10Y out? Well, it's something to be looking at. And obviously it's on its first level of, I guess you would say, demand or support. PCC is helping the case for the bears. Of course, put call ratio coming right back down. When you're getting into this range, you're allowing the market to potentially move in volatile ways. And a lot of that had to do with the fact that it was the cheapest. Goldman Sachs actually said it's the cheapest to sleep well at night, which basically means it was the cheapest to buy hedge protection for your portfolio only a few days ago. Now, whenever they put that warning out, I find that like within a week, we usually get a little bit of volatility come back into the market. Should we be worried about the internals? Dow Jones Transportation Average up. That's good. Home builders up. That's good. Okay, there's no way we can look at it any other way. What about squiggly lines? What are the Fed doing? What are the central banks doing? Well, they're continuing to stabilize at these levels. A lot of people covering the idea that tapering continues to go down. Remember, tapering is only one of the storylines. This takes tapering into consideration, these two squiggly lines. So at this stage, I would say that the market is still being supported through the channels that the central banks use. One of my favorites recently, copper, certainly got sold off pretty heavily. You could see here that we had that big gulf back down, and it may fall a little bit more before finding any rallies. It's possible that we go towards the 370 before we go to the 4. And just remember, at this stage, it's still in an upward trend. So I wouldn't be too concerned about copper just yet. US dollar did find some bounce. So let's go into the US dollar. Interesting session. Couldn't quite, as you can see here, it rejected. And then you can see the dailies kind of come back up to 103.645. The problem is it's still not above any of those highs. So I was discussing this as a potential short yesterday, but I didn't really like it very much. And I think a lot of it had to do with the Qs. So when we look at the Qs, you'll see what I mean. But basically the Qs were pretty weak looking. That usually meant the dollar had to go up. There would have been quite a few people that had shorts that had stop losses above here. So getting wiped by that is probably pretty normal. And at this stage, you know, where is the resistance for the US dollar? Well, it's somewhere up here where that supply is. So really, if it keeps going, no surprises. If it gets through here, then we can start talking about the US dollar coming back and this market pullback that's happening at this stage being a bit more serious. Let's talk gold. This was exactly what you didn't want to see as a gold trader, a huge blow off. And after making a new all-time high, that's not really the game that you want to be playing. So unfortunately for gold, this is not great. It could mean that we move into a bit of consolidation for a while before rallying back up. And I still have faith in gold moving to new all-time highs and even blowing this high out. But yeah, not really the type of candle you want to see as a gold bug or anybody that's been trading it. And the reason why is because it was clearly manipulation. It's clearly that kind of injection. And what I expect gold to do now is probably rally a little bit and fall and kind of float around like this. We'll have to see. Coming off such a huge trade like that, it's not going to be as easy to read. But if I had to guess, it would be a rally, a relief rally in gold for now, followed by potentially a bit of a sell back down and then kind of sits for a little period. This is a chart that I put in our newsletter, and I think this is something that I want to discuss, which is oil. And the reason I want to talk about oil is because you can see there on the weekly, it's falling down and down and down and continues to make red candles. Now, we have our most traded zone, and what we've done is we've set an alert below. And the reason we've set an alert below is because if the market continues to break through that point, we need to start getting a little bit worried about the entire economy. Remember, 67 is such an important support zone. If oil falls through that, Well, it could mean serious trouble for the world. And I think that we need to be watching oil. At this stage, oil's been going hand in hand with inflation. So, of course, if you look at the CPI reports, you overlay them. This is what I put in the newsletter. You'll see that oil has been going very well with the whole pre-read of inflation. And I've always known that fact. It's a pretty good read for that. But if we fall through here, the next logical conclusion is around 67.50, which you can see is this previous demand. And if we fall through that level, then we can say, whoa, something bad is happening and we need to be paying attention. So oil, well worth watching into 2024. Now, Tesla's an interesting one. I've seen a lot of people talking about the coil here. The most obvious is, of course, the trend line down, which everyone's talking about. We'll go to the weekly in a minute just so you can see this. But if we have a look at the trend line up, which a lot of people have as well, they're trapping it like this. Now, I'm not a huge trend line fan, so I wouldn't draw that bottom one personally. But what I think this is a coil. And the market is still stuck within range. So it broke out, it hit into this area. We've obviously got an alert above that because that'll be really important. But have a look at the weeklies. So the weekly has 1 rejection week, 2 rejection week, 3 rejection week. If it breaks through that 230 area, that 232 daily close low, this could be significant because it's basically showing you weakness. And everyone's kind of negative at the moment, I would feel, in terms of the articles. People don't like the Cybertruck. I think we've got to leave our opinions to the side and just go with what the price action's doing. But at the moment, you've got weak rejection, weak rejection, weak rejection. If we get above there, it could be a pretty nice breakout up to 280, 278. If we go down, though, get ready to go back into those 205s and 210s. So I think that Tesla's going to have probably a pretty good trade on it soon. And at the moment, it's just still stuck in the range, and that's how you have to look at it. What about semiconductors? They fell, but they did find buyers. It would have been nicer to see the actual market hold the lows, because when you see those kind of huge rallies, it makes you think, well, there's still a lot of buy demand. And I guess rightfully so. In some ways, certain technology stocks did hit key levels. So if we have a look at the Mag 7 here, you can see I've got this little blue line here. This is actually a demand zone, and the Mag 7 hit it and then found buyers. So that could actually bring a little bit of relief. And then what you're kind of guessing at this stage is this would be ideal, but you're going to have to look at the Qs. So let's just go through some indices here first. We'll go to the Oz 200. It's falling off a little bit. I'm still bullish on the Oz 200 here because, of course, the inverse head and shoulders, left head, right shoulder. So I'd still say that's okay for now. We'll see how it ends up playing out. Let's look at the DAX quickly. Just bring the DAX up. We're at the resistance. Nothing's changed there. Look for consolidation at this point, even shorting at around this level. And if we do consolidate and then bull up, then keep expecting long run. At this stage, the trend is up. I would call it completely neutral, though. I'd neutralize here, to my opinion. Let's move over to the US 2000 before we get to the NASDAQ. So the US 2000 continues to rally up. It might have more legs in it. I've got 1920 as a zone I'm watching quite closely. So as a resistance. So for now, I would expect it to potentially get up there, even pullbacks to be met by bull demand. And of course, this area here was such good structure now that we know if we get down there, we've got to expect buyers to come back. So certainly the 1800 worthwhile setting alerts for on something like the Russell 2000. Let's talk Qs. So first picture, you'll see here, we have a lot of gaps that are still unfilled. Now, they don't have to fill yet. Just remember that. This one would be logical, though, 378. Previous resistance, gap fill. I'd like to see it fill. I'd actually like to see it go further. Like a 371, 370 on the Qs would be a really sweet level. We're currently trading at 386. But for the bears, you're just not going to like that chart. So if you're more of a day trader, you actually want to see the low get taken. Imagine if the low got taken and that could flush quite a lot lower. So certainly worthwhile setting alerts there. What we'll do is we'll set a couple of alerts. We'll set an alert for the low. We'll obviously set an alert for the high and see if that happens. And if it has just flushed and this is like this, get ready for it to keep rallying, possibly all, completely bust off everything and go, to the moon, because it's going to probably get through this level too if that's what's going to happen. Consolidation before a peak, I wouldn't be surprised at all if it goes to a new high. For now, though, let's look at the futures. So this is where it gets interesting. Of course, our weakness level was 16,000. If you day traded, shorted that with stops above here, congratulations, well done, not bad, okay? It's pretty good, it's pretty consistent. It's actually a trade that we would use in our day trading masterclass, which I did, links in the description, just as a quick shout out. But I did discuss this in our Q&A this week and said that that's exactly what kind of I expected for it to occur, enough of the percentage of the time to make it worthwhile. And again, that's what you're really doing. You're playing stats. Going against the trend is very hard. That was an interesting rotation. So we've now gone underneath this low. We could get a little bit more of a rally. Of course, we still want it to hold underneath 16,000 if possible. And if it's coming down, is it possible to get into this area? So the most traded zone on the way up was 15,287, which is why I've put it there. This is actually where I'd really like the market to get to. A nice little pullback comes from the start of December, beautiful. Rally on through after that, beautiful. And then we actually see an outperformance of the Russell 2000. That would be the perfect statistical data kind of approach to the markets at this stage. Will it happen? Well, you do also have that really strong technical. Of course, the technical highs on the way down. You've got structural zone. You've got a traded area. You've got a lot to like about that should it occur. So for bulls or for bears looking for levels, I think a lot can happen here. The problem for bulls or bears, is that we did see that big pickup. But after hours, you can see it kind of came down in futures. So we're trading just this little demand. And 16,000 will hopefully hold the bears and they'll keep selling it off there. And I would like a correction down to the 15,200s. But liking something doesn't mean it's going to happen. S&P was nowhere near as weak. If you look at the S&P, the notable I want to say here was that we have 1, 2, 3, 4, and 5. Okay. And I might put this as the thumbnail for the video because what you're looking at is a pretty rare occurrence. 1, 2, 3, 4 down. 1, 2, 3 down. Okay, here's over here. 1, 2, 3 down. All right. 1, 2, 3, 4, 5 sideways down. And that's kind of what you expect. There's very few times that you really don't get sideways or down after having such a big run. So here's one that's, I guess, very crazy, which is 1, 2, 3, 4, 5 sideways a little bit, but still not really down. 6, 7, 8, 9, and then it goes sideways. Now that's pretty rare. In general, you'll have about 5 or 6 weeks of up market action followed by side to down action. And that's where we are right now. Does it make sense? Yes. Does it mean you lose faith in the rally? Well, we haven't been given that information. Remember, transportation's up. Effective yield getting a little bit scarier. The Fed's still there. Most of the bull signs are still intact in the internalized market, but the rotation was the key in this case and that dark pool liquidity data. So that's really what we kind of picked out there. And I hope that most of you found some value in that. Let's talk about Bitcoin. We continue to say the same thing. I think we've been pretty consistent on Bitcoin. Don't short it. Is pretty much what I've said for 2 months. When did it start? October, yeah. So when we broke out in October, I've consistently not been bearish on this particular coin. And I'm sure a lot of people have. And what I just learned is that this didn't give us anything. It didn't tell us to go short. Now you might say, well, Tom, I shorted in here and I made lots of money, stuff you. Yeah, fair enough. It's possible, but I like to play the stats. And as I say, patience, react, don't predict. Do we know it's going to short here? Not really. 42K is a good zone for some TP scale. And the reason why is that when you look at it, this was actually supply that led to a massive sell-off. So just like this one. Now, if you think about it, came up to this level and struggled for a bit. So I could see consolidation here. I've talked about 46 to 48K a few times on the channel. So 46,000 was obviously one of the targets. I can see 42 though, just looking at it further and why it's key. And I would expect some structure to create here ideally. That would be kind of what we're looking for. If you're interested in more things about Bitcoin, crypto, commodities, stocks, and everything else moving forward, please remember to subscribe to the VIP free weekly newsletter. It's pretty good, and hopefully you enjoyed the second edition of it. Also, you can check us out on some of the other socials, and make sure to subscribe and smash that like button. In terms of everything that's going on for the rest of the week ahead, the big one is going to be the jobs. So remember, Friday is non-farm payrolls. That happens at 8:30 a.m. And that's something that everybody's going to be looking for. Don't just focus on the number itself. Have a look at the revisions as well of what happened over the last 2 months. Did we lose more jobs? Did we gain more jobs? You'll be surprised how ridiculous some of those numbers are. And of course, we'll report onto it in this show so that you know what's going on. Thanks so much. Bye for now.